So I'm often asked, will mortgage rates drop this fall? And here's what buyers need to know. Not just buyers, but people looking to refinance their mortgage that maybe they bought a house over the last full 4 years. So I've been thinking about this, and when it comes to are rates going to drop sometime soon, that's a very fair question, especially with headlines constantly shifting on the housing market and feeling unpredictable. In this video, I'll do my best to break down what's really happening with the mortgage rates, what the experts are saying, and most importantly, how you can make a smart move no matter what the rates do next. So where are rates right now? Mortgage rates have remained elevated for most of 2025, fluctuating based on inflation data, Federal Reserve signals and feelings, and overall economic uncertainty. Currently, the 30-year mortgage, depending on credit score, loan type, and down payment, is hovering around the mid to high sixes. While that's higher than what buyers and mortgage holders were experiencing during the pandemic, overall, historically, it's a fairly moderate interest rate compared to the past decades. So what could cause mortgage rates to drop? Well, there are several factors that will lead to this. One is a cooling inflation. As inflation continues to ease, there's less pressure on the Federal Reserve to keep the rates high. Weaker economic growth. So slower job creation or a softer GDP could push the bond yields lower, which will typically bring the mortgage rates down with them. Another item that could cause the rates to drop is the shift in the Federal Reserve policy. When the Federal Reserve begins cutting rates, mortgage rates will tend to follow that downward. Now, there's a little bit of a lag because the mortgage rates follow the Federal Reserve decisions are all based on the market and the investors. So they move on based on investor expectations, economic data, and global market trends. So with the housing and mortgage industry forecasts, Fannie Mae predicts the mid-sixes gradually through the end of the year, while Freddie Mac sees the potential for a 30-year rate to drop to the high fives by early 2026. The Mortgage Bankers Association expects rates to decline steadily, though not dramatically. So the risk of waiting for rates to drop. As you know, when the rates drop, many more people enter the housing market. There are more buyers, and there's more competition to buy homes. So even though the rates might be a little lower, sometimes the price of the house might be pushed up because of competition. So by waiting for the rates to drop, you're going to miss out on some economic growth. So equity growth, I mean. So what that means is by waiting, and as rates come down, you have more competition. More people are going to be looking at the houses. The prices are going to go up. So that will cause a negative impact on your equity growth. I've often been told that for every 1% of interest rate reduction, 5 million new buyers enter the marketplace. So when you're competing with those new buyers, obviously the basics of economics, the supply and demand, is the demand is going to exceed the supply and the prices will go up. So all I can suggest you do is maybe reach out to me. We can start the pre-approval process. We can have a conversation about getting into a home now versus waiting, and I'll be happy to walk you through that process. Maybe the process is, maybe you just don't know how to qualify, or if you will qualify, and I'm happy to walk you through that. Or let's say you're a self-employed person and you can't qualify through traditional means. We have other alternative financing programs for self-employed people who don't document their income 100% based on their business. So I'm here to help, and I hope everyone is doing well, and I will talk to you soon.